Good morning. What's going on, guys? It's 10:29 on the 22nd of October. Hope you've all had a good weekend and are ready to make some pips in the market this week. So, as always, we'll get started with Aussie dollar. Here on the weekly time frame, continue looking bearish here. I did say last week that I expected price to come up to test that moving average, that blue exponential moving average, which price did just come short of before retracing and closing as a spinning top candle. So now this candle does show indecision, as now we would expect to see a downside move here in the form of an evening star formation. However, after this inside bar formation, we could be ranging here for a matter of time before breaking out one way or the other. In terms of gold prices, as we know, Australian dollar is correlated with the price of gold. Gold has stalled slightly and could be looking to reverse towards the downside. So that could correlate with this after the bullish run over the past couple of weeks, stalled here, and now it could be looking downside, as you can see, towards this 0.699 Fibonacci extension target. So on this weekly candle, we may be seeing price tap this moving average once more, or alternatively, we could just be coming straight down to this weekly support level right here. Now, to take it down to the daily time frame, see this consolidation a bit more clearly. Price found support on the weekly support level and has been ranging in this consolidation zone, failing to really break below the moving average, the exponential moving average. However, towards the end of last week, we did have these rejections from the upper region of this consolidation zone. So given the last daily candle on Friday, pulled back from that simple moving average and closed right on that exponential moving average support. Price did continue downside, but looks to have failed to break through the support of this range. However, we are just getting stuck on that exponential moving average. So as the moving averages converge, we may be seeing price consolidate a little bit more in this range before heading towards that weekly support level, or alternatively, depending on how today closes, we could just see downside. We would be looking for a close below this 0.7100 level to head down to 0.7050. As you can see, price formed this lower low, and then last week formed this lower high just shy of the 0.7166 level. On the 8-hour time frame, you can see that the moving averages have now crossed over. This week's open did gap down, but as I said, failed to sustain below this range. The current candle came back up, has retested this moving average resistance, and seems to be pulling back. So we could get the break of this 0.7100 within this current 8-hourly session, which closes at 2 p.m. today. As you can see, although we are consolidating, price has been forming discrete lower highs and lower lows highlighted in yellow. The last low was only, I think, about 1 pip lower than the previous low. However, it was a lower low nonetheless. Onto the 4-hour time frame, much the same here, as price attempts to retest the exponential moving average. We've been seeing lots of upside wicks suggesting upside sensitivity. The last H4 candle did close as this bearish pin bar, which further supports the fact that price is struggling, struggling upside. So we are looking for another test of this 0.7 100 level, and then once price breaks through these previous lows, we are looking towards 0.7050 as our initial target region. So now if we take it onto USD JPY, as mentioned last week, we were looking at that retest of the monthly moving averages, which have now crossed over to the upside. It looks to me as though we have rejected that, and as we struggle around this region here, around the previous highs, we are looking towards that 117 major resistance level overall. I am confident that that will be met. Whether we do have a pullback towards monthly support first or not is another matter. On the weekly time frame, clear some of this up a bit, you can see that we do have this upward trend line. Price rejected it for a second bounce, formed the new highs before pulling back, and last week tested that uptrend for a third time, which was also in line with a test of the 61.8% Fibonacci retracement zone at 111.60. Now price is back above the exponential moving average. I do expect to see these highs broken for price to form a new high, potentially in line with this Fibonacci extension target. Initially, our targets are at 113.75 in line with the previous high and weekly resistance. Now on the daily time frame, you can see that after Thursday's bearish close, back below the moving averages, price failed to continue with this momentum. I was looking at the 111.70 region as a target. However, price didn't quite come that low, and Friday saw bullish price action. This was an inside bar formation, or is an inside bar formation. However, given the fact that Friday did wipe out the majority of Thursday's bearish price action, I would say this is less indecision and more a continuation of the bullish trend. Obviously, price moved back above the exponential moving average as well, and following the gap up with the market open last night, we did see price return, fill the gap and test the downside move. However, we are looking like we are continuing upside. My initial target was 113, as you know from last week, the upside target, this blue highlighted region here, in line with the simple moving average. Price is looks to be fulfilling that already. I expect 113 to be tapped today before a potential pullback to this 112.60 region, and then heading higher towards that weekly resistance level. We may not see a pullback from this region. We could just push straight through to that level, pull back to this 113 before taking off higher past previous highs. We'll have to wait and see. On the 8-hour time frame, you can see that we've had that moving average crossover, rejection of the 200 EMA in line with that uptrend, and now as price rides the exponential moving average to support, bullish momentum is increasing towards that 113 level. Overall, I do think price will be testing this 114.50 high fairly easily. However, with the levels of resistance we first have to break, we'll have to again wait and see. On the H4 time frame, we did have this counter trend line, if you remember back to last week, and towards the end of last week, the price did just edge through that, breaking that counter trend line. Here's the gap up with last night's open, which came back to retest that broken counter trend in line with the moving average support. You've got all three moving averages lining up here, and as you can see, price is rejecting those nicely. Following this, we've had that that bullish momentum from this region towards the 113 resistance zone. Now from this region, as I said, I do expect further upside. We may see price hit the 113, pull back, tap the exponential moving average once more before extending higher. Onto USD CAD. So we were bearish for quite some time here, and following this low, it was obviously a new lower low. However, it did form a rejection of the refined zone of our upside Fibonacci. So now price is back above the 1.3 major level, and also back above the moving averages. So we could be seeing price action pick back up again here. Last week did close above the moving averages as quite a bullish candlestick. However, this week may just be seeing a slight pullback to retest these moving averages before pulling up towards 1.3200 resistance and potentially 1.325 weekly resistance. We'd have to see how the moving averages react at the end of this week, as if we do see a crossover as price closes around this level, then we could be seeing further upside. However, 1.32 looks to be a good initial target. Now on the daily time frame, if you remember, price did break through the downtrend as well as this highlighted resistance region, and this was the neckline of our inverse head and shoulders pattern. So now price has broken that. We do expect to see a continuation upside for that 1.3165 daily resistance, and then towards the 1.3250 weekly level. Friday closes the spinning top, came just shy of the Fibonacci extension level, but it did form quite a nice rejection from that exponential moving average in line with that daily downtrend. Although I do see after price has attempted the upside today, we could be coming back down to retest this level. Obviously, price has formed a new high here, highlighted by this yellow bubble, after forming this higher low, broken these previous highs. Now we could be forming a new higher low at a retest of this downtrend before continuing upside. There is a potential to spike as low as the 1.3 major level, but given current bullish momentum, I don't think price will go that low. Now in the 8-hour time frame, see price formed this beautiful doji candle, and now looks to have confirmed this reversal with an evening star formation. Would suggest further downside. To see if we draw a fib to this high here, then 38.2 does line up with the bottom of this blue zone, um, leaving the 61.8 in line with monthly support and the 50% in line with the retest of that downtrend. So we will be watching these levels, but as we approach the exponential moving average, we could be seeing a reversal up here around 1.3070. On the 4-hour time frame, you can see that price did consolidate slightly here, but now we do the last H4 candle did close below the exponential moving average, and we do look like we could be turning downside. It could be the case that as price falls down here, the moving averages converge, but then we may see price reverse before the crossover and then continue upside. Quite often, especially with USD CAD, we see the moving averages converge but not quite cross over. As you can see over here, there was a nice example of that. Price did break through the moving averages, they converged, looking as though they were going to cross over, but then price quickly ripped back up and bullish momentum continued. So that could be a similar scenario here. As price comes down, we see moving averages converge, but then prices whip back up, continue towards our upside target before the moving averages actually do cross over. Again, here we are above the long-term exponential moving average, the 200 EMA, which should also provide support to price action. Now onto GBP USD. On the monthly time frame here, you can see that price has rejected those moving averages wonderfully, and they are crossing over now. I do expect further downside here. However, we do just have to bear in mind that we are caught on that 1.3 major level. Here on the weekly time frame, we have had a lot of indecision within this region. You can see that price is consolidating, failing to break the monthly support and at the same time the weekly resistance level. However, if you do look at these candlesticks more closely, you can see the amount of upside rejections with these long upside wicks. So although last week closed as a spinning top candle, which does suggest further indecision, and it was also on top of that exponential moving average as support, we did have this massive upside rejection, which suggests that bullish strength is limited. This week we've already started to move bearish. Price does look to be price is now back below the exponential moving average as we move to that 1.3 major level. Should this be broken, which I do anticipate, we may be looking first at this 1.285 and 1.2850 region before these previous lows at 1.2700. However, it could be a matter of weeks before we see that. Now on the daily time frame, hopefully you can see what's going on here. Let me just clear this up slightly and move this onto the hourly time frame. You can see that we do have this uptrend as specified last week. Price did tap that last week, and on Friday came back up following that fourth bounce, that trend line, to test moving average resistance. The moving averages, price has pulled back to below this 1.3070 zone, as the moving averages have now crossed over. In today's candle, you can see that we did pop up to test these moving averages once more, and price now appears to be melting. As I said, I do believe that we will be seeing 1.3 major support very soon. However, today we could still pull up from this uptrend, potentially closing as a doji indecision, lining us up for a midweek meltdown. And as you can see, past 1.3 monthly support, we do have that Fibonacci extension region, to which price has rejected the 38.2. So we will be looking towards the 1.2950 region initially before heading lower. The next target after that would be down here at 1.2600. Now onto the 8-hour time frame. This should be on the 4-hour. You can see the rejection at the end of last week slightly more clearly, and as you can see, that was a rejection from that 200 EMA, along with the smaller exponential moving average here in blue. The last night's open gapped up slightly to that exponential moving average, but closed as a spinning top candle, following one final test of that 200 EMA. Price is now melting towards previous lows and back towards that 1.3 monthly support. Here, price was consolidating briefly, trapped in between the exponential moving average and 1.3070. Just right in this moving average resistance zone. We had a couple of spikes to the upside, however, bulls failed to maintain the market at these regions. Now the last H4 candle closed bearish back below the exponential moving average, and now price appears just to be melting lower. So I'll keep you guys updated in Telegram, and I'll see you again for the midweek review. Trade safe, guys, and see you soon.